Welcome everybody to the weekly game plan. We've got a lot to cover this week. We've got earnings, we got the market update. I'm going to be giving a quick trading recap. Then I'm also going to be going over some trade setups. So let's get right into it. First of all, we got the S&P 500 looking a bit choppy. It doesn't look like it wants to really break through all-time highs with explosiveness, but it also doesn't look like it's going to crash. So I am forecasting kind of a choppy week. If we take a look at the earnings calendar, which I actually have up on Discord right over here, I'm going to move you guys over here. We can see that there are a lot of earnings that are going to be affecting the market. So we can take a look at this. We got Ford, Waste Management, SoFi, McDonald's, Pfizer, Crocs, Visa, Google, AMD, Lilly, Caterpillar. And so what's cool about all of these earnings reports is that they create day trading opportunities. If you want to take a small gamble, that's totally fine. Just keep your risk in the options. I'm not a huge proponent of holding over earnings unless you have a long-term time horizon. But the choice is yours. The risk is yours. We got Coinbase, Meta, Microsoft, Amazon, Apple, Intel, MasterCard, ExxonMobil. So we got a lot of different companies that are reporting. And one other thing I wanted to note. Hey, I enjoy Halloween parties, costume parties, you name it. I enjoy running 5Ks. We did a 5K last weekend, so try to get active. And if you're going to go to like a Halloween party, be safe, be responsible. But also I use it as an opportunity to kind of like level up my like social game. I need to practice my social skills instead of just sitting behind a desk trading markets all day, but it's just been so lucrative. So I digress. Overall markets kind of looking choppy. If we take a look at something like the VIX volatility is moderately elevated considering it's above 20 right now. So keep an eye out for that. There could be some extreme moves on the intraday. So just be careful about that. We got stocks like Tesla. Tesla's going beast mode, gunning for those highs. We talked about TSLL, wheel, TSLL, cash secured puts. So I would have been better off just buying a crap ton of Tesla, but whatever. I couldn't really risk too much in front of the earnings report. I was willing to buy it though at this 200 level. So now Tesla, if it really starts to break above 270 with volume, that's a nice good breakout setup. On the weekly time frame, looking good. Monthly time frame, we could see new all-time highs over the next few years on Tesla. So I'm bullish long term. Short term, we might see like a pullback. A pullback of 5 to even 8% is completely normal. And in that case, TSLL, cash secured puts, could potentially pay. And with that being said, I actually also want to go into a quick recap of last week's trades. It was a really good trading week. We caught the low of day on ASTS early in the week. It was like down here. Actually, here, let's go to the hourly time frame. Basically, we caught the low of the day, and then we got a nice good bounce, 10% bounce. This has been a really good stock for the wheel because the premiums are just so high. But this is a longer term play. I do think the stock can hit about $35 a share. It's currently at $25 a share. It may go through some drawdown in the short term though. So if we look at the daily time frame, it's tricky. You really want Friday's low to hold on ASTS. But that was a really, really nice win. 2 to 3% win on the cash secured puts. Another trade from last week that was alerted. BBY, just like ASTS was alerted. Breakdown, we talked about it underneath 96. Boom, the alert goes out. Neutral/bearish. And it dropped 3.6%. BBY still looks like it might come down a little bit further and maybe test the 90 level. So that's a potential little mini bear flag. It's a bit extended to short, but maybe if you want to take an intraday trade on it, that's totally cool. The only expense trade I had last week was on GLW. It's just because it didn't really break out explosively. It was only literally like a $10 loss. So it was basically just slippage. But grabbed the call options at like 46.50, got a high of 47.72, and I just kind of pulled it off once it started to revert back in. And that was a good choice because I saved a ton of money. So that's pretty cool. Another winning trade last week was on Hims. Hims and Hers Health sold the 21 strike cash secured puts. Those expired for maximum profit. This week on Hims, Maybe I won't go with the 21, but maybe I'll go with just the 20 strike cash secured put. I'll only get a 1% return, but I'm happy to own it at 20, and my support level is about 1879. HIMS reports earnings on November 4th, and my price target for HIMS is $30 a share. So HIMS is good as long as really it holds above 13. So that's kind of like the risk. You might have to risk 38% to only make about 40%. But even though that's only a 1-to-1 risk to reward ratio, the probability is much higher that it goes up because it's above the 200-day, and we can always just wheel it and then we collect the cash while we wait. So that's really cool, and I'll be sure to notify you guys when I enter HIMS again. Okay, so that was a really, really good trade. Keep that on watch. Another really good trade last week was on Run, and I did what's called, like, I like to call it a pin, and I don't think that's the technical term, but basically I sold the cash secured puts at $13.50 last week, got a ton of premium for it, and I also bought 200 shares and sold the $14.50 covered call, and I actually got called away after hours on it, so I got paid to take profits, which was pretty cool. So entry of 14, getting a 3.5% gain on the shares, and I also got 24 cents. So, you know, 14.74. So that was like a 5.2% gain in just 1 week. That's pretty good on a decent amount of shares. It's just normal position size. So that's pretty cool. Run wheel is still in play. My price target on Run is about $15 a share, and they do report earnings this week. So that's another, you know, potential trade idea, trade setup. It is potentially rejecting at the 200-day. If we take a look at something like the solar sector, TAN started to break this kind of support area and then quickly reversing and jabbing back up. This is a mild little shock gap because it took out all of this selling. So, you know, maybe the solar sector does get a little bit of a run, and TAN could test something like 40.50. TAN will likely outperform if the Democrats win, and it'll likely underperform if the Republicans win. It's tough to speculate on what exactly will happen after the election, but that's just a quick framework to use for TAN. And lastly, another good win last week, SOXL, cash secured puts. I was just expecting chop. We got exactly that. Sold the cash secured puts on Monday, sold the 31.50 strike cash secured puts. I only got about 1.8% return, but still, it's just for doing nothing, and I was happy to buy it. It never got down, and it gets a little bounce. I like the SOXL wheel still. I just like to get a little bit better of a deal. Maybe it can sell off into like 30, and maybe I can sell like the 29 or the 28. If we take a look at some of the premiums, you know, the premiums are still pretty decent on SOXL. Even selling the 28 strike cash secured put, you're only going to get 12 cents, but you can maybe size up the trade at that point, or maybe get a little bit better of a deal. But the premiums are awesome on SOXL. We can take a look at NVIDIA gunning near all-time highs. The volume's not exactly great. Taking a look at Qualcomm. Qualcomm tried to break out of its range, broke out, failed. So kind of not exactly a tweezer top, but a false breakout over there. So yeah, maybe I'll wait on some of these chip stocks. AMD just kind of hanging out right now. It is underneath its 200-day moving average. Intel, I am still wheeling Intel. I've been wheeling Intel since this like 18, 19 area. And so I'm still wheeling it. Intel might break out. It's tough to say if this flag is super bullish or not. This whole gap window is going to be resistance. But Intel, maybe if it gets above 23.38, maybe it can get some legs. It does report earnings on October 31st. So spooky season for Intel. We'll see if that goes up a lot or down a lot. Only time will tell. So it was a really, really nice winning week last week for us. And I am actually going to be hosting a masterclass with Brandon Carter on Wednesday. So I'll put the link in the description. And it's super easy to sign up. You just click this, click register. We teach you guys at no cost to you. It's going to be a lot of fun. I'm going to talk about the wheel, futures trading, and it is going to be a brand new offer, which is pretty cool. So be sure to check it out. Come say hi. I can see you in the chat. Everybody can talk to each other in the chat. There's going to be audience participation. I'm going to share a little bit about my trading journey. We got fun pictures to share, videos to share. It's going to be the best masterclass yet. That's for sure. So click the link and join that if you're interested in learning more about trading and investing. Basically, those are the best ways that I profit in the stock market. That's what I'm going to be sharing. Okay, so that was last week. Now let's get into some trade ideas for this week. Okay, and again, I'll notify you guys when I'm getting into some of these trades. Okay, so first up, I want to talk a lot about Bitcoin. So /BTC, looking good, up 2.39%. This is looking like a potential breakout on Bitcoin. And I think it's worth taking a long position before the breakout and then average up into Bitcoin through the breakout. I'm not some crazy crypto crazy, but I do think it is worth paying attention to and putting a little bit more money into Bitcoin. And just a quick reminder, none of this is financial advice. I'm just telling you what I'm doing. And that's what I'm going to be doing. Last week, I sold the BITO, cash secured puts. And BITO, I got assigned actually at 19, which is cool because I got paid 30 cents to do it. And I've been wheeling BITO for a while. It pays really, really good dividends, so I'm getting a lot of income from this as well. Just this year so far, nothing crazy. You know, I've got like a $40,000 portfolio that I trade with, but I'm getting about 3.3K a year in dividends. So that's pretty good. And BITO is contributing to that. So BITO wheel is in play. I like that. I got assigned. I actually got called away at 1950. So basically, there's so many ways to cash flow this, and I really want to bring it to your attention. Okay, that's what I'm really focused on this week. Okay, so BITO, maybe the 1850 strike, cash secured put if you're not in already. Like, look at this. Huge volatility, huge premium on this. What is going on? That's nuts. Getting 70 cents to agree to buy 100 shares of BITO at 1850. It might pay the dividends. That's why the option premiums are inflated right now. But that's really, really cool. Another one that I'm watching is uranium. So URA. This is kind of looking like a bullish pullback formation. Even if it sells off a little bit further, I might be looking to sell like the 30 strike cash secured puts, maybe the 30.50. Yeah, even the 30, it's paying about 20 to 25 cents. And you can size into that if you wish. I am very cash heavy right now because I got called away on a lot of different things last week. And we just did cash secured puts. But 30.50 on URA is a potential trade idea, trade setup. Another one, if you want more risk but more potential reward, is SMR. And they report earnings on November 7th, SMR. And this is just kind of looking like a little pennant. We got a rally, a pennant. Can we get another rally? I don't really have much of a price target on this. So that's something to consider. But this is like a momentum stock with higher short interest. You know, maybe a small breakout over 19 and you can average up over 1950, take profits into the highs near 20 and take profits near 21. Stop on that would have to be underneath 17. Or if you want to, I suggest I'm probably going to do a pin. And I like to call it a pin because I'm selling cash secured puts. Maybe I'll sell like the 16 strike cash secured puts. And I'm going to buy 100 shares and then sell the 21 strike covered call. That way, if it just goes sideways all week, I get cash flow on the top end, cash flow on the bottom end. And then if it breaks out, cool, I get called away. If it sells off and really gets hit hard, that would be the worst case scenario. But, you know, that's welcome to trading. That can happen anytime. So SMR, the premiums are nice and high. I'm looking to get paid on SMR. And I just need to wait for that setup, either the breakout over 19, or maybe if it comes down to support the bottom end, maybe it's just worth it to sell the cash secured puts. And a longer term stop on this would be like a daily close, probably a daily close underneath like 13. I want to give this gap right here is going to be some strong support, 1360. So higher risk because you might have to risk 30 to 35%. But remember, you're getting that weekly cash flow. It is a momentum stock and it can get running. Because if we take a look at the URA, uranium, on the monthly time frame, could be starting to break out on the monthly time frame. And even if uranium retraces just a portion of what it did back in 2000, back to the price it was at 2012, that represents a 70% upside on URA. So a few ideas right there. That's really cool. Another idea is ONON. This is a relative strength long idea. And again, kind of just got this little channel. We just broke out of that channel on a small increase in volume. ONON. Could look at the weekly call options. Could look at the monthly call options. I like the December 6th 55 strike call. And just use a smaller position size since the bid-ask spreads are a little bit wider than something like SPY, of course. But I like ONON long over Friday's high. Stop would be maybe a daily close underneath 47. And that gives you multiple supports. And, you know, if we take a look at the hourly time frame, there's this support at 50. There's a support at 48.50. There's support at 47.50. So if it closes a day underneath 47, that trade is negated. And obviously in that case, you couldn't use weekly call options, but the monthly call option is an option. Literally an option on multiple levels. Okay? So that is ONON. Another trade idea is HD. I don't have too many short setups. Obviously the market's just been in beast mode, but HD, Home Depot, kind of got a break of support underneath 415. And now we got this bear flag that's forming. This is a drop bear flag. I don't think it can fulfill its full target down here at 380. Maybe it could. If the market gets weakness, I think it could. But HD is a short setup, kind of underneath 398. If you want extra confirmation, maybe 396.50. And I think a good take profit zone would be this gap right here at 391.89. That could be a magnet. So 392, 393 area. That could be the take profit. And obviously a stop on that would be above 400, but maybe above 403.66. Hard stop at 403.66, maybe a soft stop as a daily close above 400. So HD short, you could go with put options on this. Ideally, if it's going to work, it's going to work kind of right away. The premiums are really, really high because they do have earnings on November 12th. Maybe something like a bearish call credit spread, sell the 400, buy the 402.50. You'll collect a 1.13 in credit. And if it's just underneath 400 by the end of the week, you'll take in $113 of pure profit. So I'll alert you guys and let you guys know if I take that trade. And you can partake if you want. Otherwise, you don't have to. That's what's fun. Keeping with the theme of Bitcoin, I do like Hive. This is a Bitcoin miner that could potentially outperform. There's a breakout setup over 388 on Hive. Otherwise, I might do something like sell the 350 strike cash secured puts. And I'm going to actually take a look at the option chain, and I'm going to say return on risk, RET, return on risk, add item. You can actually see it's ROR. You get a 3.7% yield if I just sell the 350 strike cash secured put. So that's a potential trade idea right away on Monday. 350 cash secured put on Hive. HIVE. CLSK, Clean Spark. You guys know I've been wheeling this for a while and it's been going very well. I did sadly get called away and missed out on 22% gain, but that's okay. I still made some good profits. You know, I made like 13%-ish wheeling it down here. So now if CLSK could maybe come back into like 1050, that's a potential trade idea. So 1050 on Clean Spark, sell the 1050 strike cash secured puts. Super simple. They'll collect a lot of premium for that too. So that's fun. CLSK, Clean Spark, along with Hive. Okay, so those are the main trade setups that I wanted to talk about. There's another one, Texas Roadhouse, TXRH. Texas Roadhouse. I've actually never eaten there before. Let me know if you've eaten there before. But a nice breakout on a good increase in volume. It's a little bit extended short term, but that's not a problem if you go to like the weekly time frame, mildly extended, monthly time frame, just starting to break out of a fresh kind of megaphone bull flag, and it did break the top end of the channel. So that could be something interesting. TXRH, maybe looking at something like the December 20th, buying the 200 strike call. Maybe the 210 strike call. It's a little bit far out of the money, but you can always just flip the premium and sell on a pop. Keep the risk in the option premium. Obviously, there's a retest set up at 184 on Texas Roadhouse. 184 is a short-term support. But yeah, looking really, really nicely. A nice flat top. Long over 190. It's got the earnings momentum. It's looking good. Okay, so those are the main trade ideas and trade setups that I had for you guys. What questions do you have? I'm happy to break it all down. I'm really excited too because Nima sent me some lighting equipment to buy. I bought the lighting equipment. So we're going to have better lighting in the future. This is going to be fun. Okay. What kind of questions do you guys have? All right. Yep. Thinkorswim is pretty much used for learning charts, but to actually swing trading, I need to go into Charles Schwab and do it there. No, you can do it right here on the charts. You can trade right on the charts. You can trade the active trader tab. You know, I can buy at market. You can place orders right here. Yeah, you can trade right on Thinkorswim, which is really, really cool. Trade from the chart. It's a lot of fun. Have I spotted any fade trade possibilities for the company's reporting earnings? You know, that's a good question. I usually like to see it in real time versus anticipate the fade trade. That's just me personally. Everybody's different. Here, if we pull up the earnings calendar, like, you know, Ford's pretty much in a spot where it could break out up. Ford, my price target is 19. Maybe McDonald's if it gets absolutely crushed, but I kind of want to let the dust settle. McDonald's is going through some shenanigans with their burgers killing people, so that makes sense why it would be going through some headwinds. Let's check out Crocs. I'm curious on Crocs. CROX. It's been a while since I've seen this stock. I don't have a fundamental value on Crocs. Kind of looking... Yeah, this one's just a pure breakout setup on Crocs this week. $12 is the expected move. I'd say that's fairly priced, maybe slightly underpriced for Crocs. It tends to move decently well for earnings. You kind of got a pennant. You got lower highs, higher lows. Which way is the pressure going to break? But that's not a fade trade opportunity. That's like almost the exact opposite of mean reversion. So for those of you guys that don't know, a fade trade is where if it's really stretched in one direction and then it gaps up on earnings, you kind of wait for the setup. Everybody has a different style and setup that they use, but like maybe Wells Fargo was an example. I kind of drew this move up and then a pull back. It just pulled sideways and then moved higher. A bearish engulfing though on Friday. If we take a look at the XLF, the financial sector, that's a big bearish engulfing. Usually this leads to more downside, maybe like 2 or 3 more days of downside. XLF support is 45.82. But I'd have to kind of take a look at the chart, each chart one by one. If you have a specific idea in mind for a fade trade, I can definitely take a look at it for you, Henry. Henry asked that question, right? Yeah. Good to see you, Henry. Jonathan, good to see you. ASTS. Yeah, I don't know. It's not my top candidate this week, but ASTS, if it holds this like 25 support, that's good. If it breaks it, it could probably get crushed. You know, I wouldn't be surprised to see this thing maybe test like 1878. Longer term though, I'm bullish. I just kind of need a new setup. I don't like the candlestick formations from Thursday and Friday. This has some wicked volatility though. Look at this. This is an 18% drop and it was from a potential false breakout. So that is a bit concerning. You kind of got this channel thing going here. I'm drawing it like this because it kind of didn't stay too much inside the channel. It broke out, snapped back in. ASTS almost at this point is now like a breakout buy. If I'm going to do like cash secured puts, I like to sell cash secured puts after a few down days, because then the put premiums get nice and juicy and you're more prone for a reversal. Right here, we haven't had like enough down days in a row for it to be like the highest probability trade. But you can probably milk some good premium out of this anyways. Like selling the 24 strike cash secured put gets 65 cents. Hell yeah. That's a 2.67% gain, I guess. So that's pretty cool. Yep. Yeah, if you can't make it to the masterclass live, that's fine, but I encourage you to show up live, because that way we can talk to you in real time and answer your specific questions. We will be doing a live Q&A at the end, so sign up for that. That should be fun, especially if you're watching this publicly. If you guys are in like the Legion right now, you guys are fine. I mean, you already know all of it. You can maybe show up for entertainment. Come say hi, say, yeah, I like the Legion. If you like the Legion, give your honest opinion on it, you know? Okay. Yeah, BITO usually pay the dividend first of each month, so this Friday it'll gap down. Thank you, Jonathan. There we go. Yep. All right, let's check out some other stocks. Roblox, RBLX. Roblox. I took a bearish trade on Roblox at 41. That trade is slightly underwater. You can take a look at this in my Roth. You know, it's down 30 bucks. I'm not too worried about that. I might cut this though if it closes daily above 43. Roblox just looks neutral. If I had to pick bull or bear on Roblox, I would go bearish, despite it being above the 200-day. And it's just because this move right here, this 23% drop, can make this entire like channel area like drop, and this can be like a whole bear flag type of deal. Unless we just go straight up, then it's not a bear flag anymore. But I'd be looking for more downside potentially on Roblox. I think Roblox probably tests something like 36 over the next few months, but it might take over a year. I'm willing to be wrong though on that. I'm not married to that idea. That's just a strict technical chart setup. Make a higher high, not a lot of follow through, but also having a green day on Friday when the market was red. Currently, the futures are gapping up as of right now. They're gapping up 0.44%. So right now, stocks are going to start off with a slight bullish start to the week. So that's just going to probably gap up Roblox. And I have no problem cutting that. I'll take a tiny little L on that and move on. Next up is GE. This one was a good one. Talked about the GE dip buy at 176 to 175. I said also 174.50 is another spot to layer into the dip buy. Sold the bullish put credit spreads. We get the bounce. Cool. Max profit. In terms of GE, though, it's kind of looking weak. You know, it could maybe hold this whole demand zone. So this is a big demand zone right here. So there are buy orders that are sitting here. Strong buy orders. People, institutions will likely step in there. But we already got the bounce now. We got a 5% bounce. Now, if we take that out, we could be testing lower. Could be maybe dropping 8 to 9% down to the 168 level. I think 168 is a decent value area. Maybe a decent spot to buy. I do want to check the Morningstar report just to get a fair value. So they give a fair value of 194 on GE. Okay. So current price is 180. So 194. That's pretty much all-time highs. So notice it hit the fair value, gap down. So now if it really gets oversold, that's just so much more margin that you have. So just let GE get oversold. And the reason this is a demand zone, by the way, you got this flat top right over here. Notice rejects, makes shallower, higher lows. We break out. Now we retest it. We got the bounce. So I would wait for that 168 level before buying shares and maybe longer term call options to see if it can't come back into this gap window. So remember, whenever you get a big window like this whole area is going to be resistance. So watch out. This is all supply. So this is a great spot for profit targets. If you're going to maybe take a stab near the 200-day moving average, that's another idea. But yeah, GE fair value, 194. Let it get oversold. That's what I got to say about it. Let's check out GDS. This is posted in the Legion Investment Ideas. GDS, the chart doesn't look super good, but because it's broke out, snap back in. That's a huge red flag. It's like a girl flaking you on a date, on the first date. It's just a red flag, but maybe she had something that came up, you know? Maybe. Support is 20.65. You know, this is more of like an investing stock. I was reading some analyst reports. They gave some bullish price targets, 40, 50. I think, you know, based off this chart pattern, if support can hold, it can maybe test like 32. You know, those 200-day moving averages can be like magnets. Technically, that was the 200-week moving average. This is the 200-day moving average down there at 10. If we take a look at GDS, options are not terribly illiquid. You know, maybe the November 15th, like 18 strike cash secured put is an idea. 18 is a prior support area, and it also has a support at 1712. So it has multiple chances to bounce if it gets into that level. Earnings for GDS are on November 21st. So this option expiration will not have to be held over earnings if you go with those cash secured puts. So a lot of ideas. And I like a lot of these stocks, you guys. It's highly entertaining. And exciting. Like I'm really excited, and I want to contain that excitement and just think about the risk first. How can I properly get a good entry? How can I manage my risk? And then get out for a good gain. Next up is VZ Verizon. I like Verizon for a dollar cost average zone. Maybe if this looks like a similar chart to GE in terms of the gap down, the pump from support, and then now kind of making that H formation. VZ probably holds the 200-day moving average this week. I don't know if it will though, but if it breaks it could see further downside and maybe test something like the lower 40s. VZ pays a fat ass dividend, 67 cents a share. I like this one for the wheel as well. The premiums just aren't super good. You're going to get 0.28%, 0.5%. It's almost nothing. The fair value though of Verizon is well into like the $50 zone. So 52 is the fair value. And that's based off, you know, cash flows, market environments, complex formulas that I don't fully understand. But one day I will. When I become a CFA, that's next. I just need time for that though. It does take a lot of dedication and studying, just like the CMT did. But 52 is a good price target for Verizon. It just short-term chart looks bearish. This is more of an investing stock rather than a trading stock. But I think the wheel is lucrative on it. So that's Verizon. Let's check out MO. You weekly covered calls you're looking at. Sell the 42 strike covered call. You're not likely going to get called away, and you're going to get a moderate amount of premium. So that's cool. Next up. Yeah. Okay. MO. Let's check it out. Ultra. Ultra, I think, is from a fair value perspective a bit overvalued. I'd have to double check though. Okay. Morningstar likes MO. Maybe they're updating it. People are smoking. Okay, MO, $58 a share. I like it. Because it also pays a fat-ass dividend. So, kind of got this channel right here. Earnings are on October 31st, so I don't have too much to say about that besides, you know, do what you got to do. So, yeah, the premiums aren't super enticing. There's minor support at 48. The 200-day moving average looks like a solid location. You know, this 46 zone. So, maybe get a little drop, sell like the 46 strike cash secured put. It's barely paying anything though, 0.1% return. I would just wait. I think it's a good candidate for dollar cost averaging into for an income portfolio. I think Altria, if you're okay with investing in nicotine, that's fine. PM, look at this. Big breakout on PM, Philip Morris. This one was noted in the Legion investment ideas as well. But that's a bearish engulfing candle. So potential couple days of downside. Lately, though, the bearish engulfing candles have just kind of been getting bought up. But just know that that's not normal. Most of the time, you get a little bit of follow through. I like it, though. But going back to MO in terms of selling covered calls, you know, you could sell the 52 strike covered call. Although that's just not paying enough premium. What if you get a breakout and then you're just off to new highs? What I like to do with investing is look at the fair value, and that's if it gets near that area, just start trimming. Who cares if it goes way further than that? You could always use a trail stop if you want to. Or maybe for tax reasons, you don't want the you don't want the short-term capital gains tax. That's cool too. But that's why it's fun to trade in a Roth. That way you don't have to worry about that. The taxes are taxed up front and then deferred on the back end. I'm not a tax expert though. Don't come to me about taxes. I am a chart expert though. Come to me about charts. Give me all your chart questions. TLT long into the end of the year. So this is our 20-year Treasury bond ETF. If you take a look at TBT, this is inverse. TBT going on a nice run right now. You know, I think it's okay. On a risk-adjusted basis, TLT, it's a fantastic investment. I just think there's better places for my money. You know, a lot of the stock ideas that we gave today, I think, are better. I don't have too much to say about it, honestly. Maybe if it gets oversold, maybe down to like the 89 level. Yeah. I kind of not want it like stretched really badly. Kind of like, even here, this wasn't even that stretched to the upside. That was mildly stretched. This is a good TBT ACTA style trade. I'd say sure. If you got no other place, if you just got fat stacks of cash, TLT is a good place to just park it. It's like free parking on the Monopoly board. So that's what's fun about that. Yeah, is that a double top on Crocs? CROX? Crocs? Let's check it out. I would say no. You know, it depends on how much you want to squint on this. You know, maybe this is a top 1, top 2, but then here's your valley, and then we just broke that, but kind of went back in. It's too messy. It's not a clean double top. XLV, yeah, not exactly a double top, but it did resolve to the downside. It did end up breaking that 152. XLV is a dip buy at the 200-day moving average. Speaking of which, LLY is a potential short trade idea. Underneath, gosh, the trigger's just so tricky. You kind of just maybe take like a stab at it and hold it for a few months. Because I don't see any clear entry triggers that give like a high probability of just quick follow through. Maybe if it breaks 883, maybe if it breaks 875, Monitor the volume on LLY. Maybe earnings will be the catalyst to potentially break it down. LLY is very overvalued, but what? Aren't they like the leader with Ozempic? So if they're helping people get shredded, that is a good business model. Kind of like nicotine and smoking. That's a good business model. People keep coming back. They want more. MOAR, more. Wells Fargo is a fade trade opportunity this past Friday. Okay. Yeah, should we, WFC. Okay, yeah. So if we take a look at the 15-minute time frame, the fade trade is you just set the simple setup is mark the low and mark the high of the first 15 minutes. Make sure you're on the 15-minute time frame. You short, you sell if it breaks the low. The problem is your stop loss has to go above the high of the day, so you have a lot of risk if it is a really wide 15-minute bar. But it did resolve to the downside and gave some profits. Especially on those 0-day puts. That's cool. You notice this, you have a bear flag, and then it starts to break down. Didn't do it on the best volume, but that's cool. So yeah, good eye. Fade trade. We can find some more of those. Okay, so Optimus Alert IMMR. Can I explain that? Yeah, sure. So if you have access to the courses, which you should, I teach about covered calls. It's one of my favorite strategies to profit into the market. IMMR pays about a 2% dividend, so I like buying the shares. And I think that the price can maybe hit up to 10 over the next few weeks or months. It may take actually even longer, but that does represent a 15% upside. The stop on this trade is a daily close underneath 818. So that means if price comes underneath and stays underneath, I was wrong. I'll take a quick loss and then move on. So my risk is really only about 7%, but my reward is about 15%. And so that's why when I sold the covered call, here's what the position looks like. I got paid 12 cents right away to get into that trade. So that's really, really cool because now I get paid to take profits at my profit target. I get that 12 cents, that $12, no matter what. And I've got space for it to survive. I'm hoping that it can break through the 200-day. And if it doesn't, that's cool. I'll just manage my risk. The size, the 1% size. So we can just use like a $100,000 model portfolio. So 100K. So 1% would be $1,000. That's about the amount of capital that I'm putting into that. I might average up onto this if it starts to break Friday's high. So maybe I'll buy 100 or 200 more shares and see if I can't take profits into that pop. And everybody has a different trading account. You know, I've worked with people that've got, $3-4 million. I've worked with people that only got $500 in their trading account. At that point, we just want to paper trade and practice more and more, or look at other options to get paid, like getting payouts from futures trading or something like that. Constantly dollar cost averaging into the market. That way it just kind of builds up your trading account. It bolsters it. But yeah, I hope that answers your question, Max. Let me know if you have any further questions. Next up we've got is CELH, Celsius. And again, my price target on Celsius is 36. It keeps touching 36 and then rejecting. So I'd like to let Celsius get really oversold first, down to like 22.30. Celsius on Friday had a doji day, so it's an indecisive day. If Celsius breaks above Friday's high, 32.42, it could get continuation higher. The stop on that trade would be 31.26. And just see if it can't touch. Maybe it could extend up to that 39 price target, but I'd be fully out if it got to 39. I'm not going to overstay my welcome on the stock. Its fair value is 36. So let that get oversold. But 36 even from here, that represents a 12% upside. The premiums are really good on Celsius. They're decent. So that's fun. Next up we've got is NVDL. And so this is the double levered version of NVDA. We discussed NVIDIA towards the beginning of the video. I'd watch the short-term trend line right here. If it breaks that, it could flush. It probably doesn't get too far to the downside, though. It's such a strong stock. NVIDIA is tough to be valued because you can't value it based off like older metrics. You know, if they take over in robotics and we've got robots in our homes, NVIDIA is going to be doing very, very well. But the candlestick formation, even though the stock was green on Friday, it's mildly bearish because you have a longer upper wick. It looks like a breakout buy over 144. Otherwise, I don't see too many like good dip buys besides like 119, and that'd be a ways away. I'm not saying it's going to go to 119. I'm just saying if it got there, you might get a short-term bounce at that level. Next up is TSLL. We discussed Tesla at the beginning of the video. Ideally, Tesla drops first, then we can sell cash secured puts and then ride it back up. Otherwise, you could take a breakout trade on it. Similarly, we talked about SOXL at the beginning. I'd like SOXL to get a little bit more oversold than looking at selling the 29 to 28 strike cash secured puts. SOXL, we kind of have to look at SMH instead. SMH, notice it's not going through that decay. The chart looks constructive. SMH, I like a buy at the 200-day moving average or 227.39. Okay. In terms of IMMR, I'm holding through November 15th. And if I get called away, cool, the trade is done. If I don't get called away, guess what? I go out to December 20th, and then I'll sell the 10 strike covered call and get 25 cents, maybe 30 cents. So that's my game plan with IMMR. The setup was break up, slow pullback, get long near like the 873 area right here, and then see if it can't go. I'm keeping the position size smaller on this because the bid-ask spreads are a bit wider. So it costs more to get into the trade, costs more to get out of the trade when the spreads are wide. You always want to use limit orders with stocks like these. For the large cap tech stocks, you can of course use market orders. Although I still advise using limit orders. That way you get the price that you're most willing to pay when getting in and the most you're willing to accept, or the least you're willing to accept when getting out. Any other questions? This is a good weekly game plan. We've got a lot of different ideas this week. Just to recap some of them. Here, another idea is Penn Wheel, PENN. This is starting to break out of this range. Volume's kind of coming in, not exactly. But Penn, if we check out the Morningstar report, I believe its fair value is 21. So you could just sell. Okay, 22 is the fair value on Penn. So that's fun. MGM Resorts, fair value is 52. Wynn Resorts, fair value is 117. So Penn, Wheel is in play. Maybe sell like the 19 strike cash secured put. You could get a nice good 1% gain in a week. Holding on to that. And that would be the short-term support as well. Penn 19 strike cash secured put. There's a breakout over 20.50. And then 22 would be that profit target. So Penn Wheel is in play. That's something to consider. So yeah, if you just bought 100 shares of IMMR, you can sell the 10 covered call. You can do that right away on Monday. You can pretty much get the exact same price. You might get like a penny or two less. So that's what's cool about that. You make sure you sell to open it. It wouldn't even be the worst thing in the world if you bought to open that call, because if it squeezes up, you could make a ton of money. But I like to sell options, especially with these price points. So yeah, you can totally do that on Monday. Just tag me and I'll be happy to help you. Just make sure you know your rights and know your obligations as an option seller. When you're selling options, you have an obligation. You have to sell those shares at 10, which, by the way, you would get paid to do it. You get paid to agree to sell your shares at 10. You'd make a 15.78% gain. On top of that, you'd actually sell it at like 10.10. So you'd make a 16.8% gain, which is cool. Yeah, let's say it gaps up. You might even get more premium. So that's another thing to consider, which is fun. How do you do that? Hey, so I would recommend going through the courses. We have a ton of courses. Okay? So go over to the options course. Right over here. Go through the beginner trainings. And you're going to also want to go over the covered calls section of the course. Okay? Go to the covered calls section. I go through many, many examples. And that should be really, really helpful for you. You can also find the courses in the resources channel. So really, really good question. Because there's a lot of money to be made with, wheel. That's my main specialty. That's my favorite way to profit from the stock market. You don't have to time the market as well as you do with other investments. Like, for example, like last week on Run, I bought it at 14, but look, right away, the next day it was down 3.36%. If I don't do the wheel, I might have to cut losses or reduce my position. But luckily I did the wheel, so it chops for a bit, and then it just takes the profits for me, and I get paid to take profits. So that's what's really cool about understanding the wheel. It's my favorite way to profit in the market. And it's just perfect for people with full-time jobs. They're not trying to hop in, hop out, time up the market perfectly. It really reduces the stress from trading, and it's just more viable. Cash flow is really, really important to me, and staying liquid, and that's what the wheel does for you. In other news, gold is slightly gapping down right now. I think gold might be nearing a short-term top. I don't know, though. I'm not going to call it. I am not in gold or silver anymore. But gold could be nearing a little bit of a top. SLV, maybe a little bit of a top. We'll see. Again, we traded this really, really well with the wheel. And again, my entries weren't perfect. I bought like 100 shares over like 29.30. Cash flow. Almost got called away. Drops. Now it's underneath my average cost. Cash flow. Gap and go. Exited. So it got a sign, got called away. That's it. Yep. So Henry asks a question. Quick question. I know for covered calls, you need to have the shares for when you get assigned. Yep. That's what makes it a covered call. If you didn't have the shares, it'd be an uncovered call. And it's like you have a short position. It's called a naked call. But when you have the 100 shares, it's a covered call. For all of your sells of covered calls, do I always have the 100 shares of the underlying stock? Or do you sometimes jump in and sell the option before it looks like it'll be exercised? You mean assigned. So if you own the option, you exercise if you want to own 100 shares at the strike price at expiration date. Remember, when you exercise, the premium goes to zero. So if you're selling options, you want the premium to go to zero. That's what gives you the max profit. And you would be what's called assigned if you get called away on the 100 shares. So, for example, and this more has to do with puts. I sold the BITO 19 strike cash secured put. I got paid 30 cents. I have the obligation to buy 100 shares of BITO at 19. Luckily, the broker automatically does that for me. Now, if I want to, I don't mess around buying back the short calls. I usually just accept my fate. Everybody's different. In the long run, for me, that's what works best, is just accepting the fate of the trading gods. So next week, when I sell the 1950 strike covered call on BITO, and I think it's going to get called away, let's say BITO starts breaking out, which it actually very well could, I just accept my fate. I'm just going to take it. I'll take my gain. I'll It's like I'm selling at 1980. And from here, because my average cost is 1870, 1980, that's like getting a 6% gain in 2 weeks. Sure, I'll take it. I just accept my fate. Next week, I'll sell the cash secured puts again if I want to get back in. So, yeah, if you haven't done the options course yet, do the options course. You get access with it with your membership. So that's the whole point. There's a lot of really good stuff in here, you guys. I've gone through a lot of training and a lot of courses. I hope to contribute to the CMT curriculum when it comes to options. There wasn't a lot of options training when it comes to learning professional technical analysis. They just had like a short little chapter on it. And the test exams didn't really cover options much, but I will be contributing to the body of knowledge. It's just too good to ignore. Too good to ignore. Yeah, the one. You're good. Yep, you're good. Check back afterwards, okay? Check back afterwards. Good question. Yep. Oh yeah, you got it. Hey, any last questions, you guys? There's a lot of good trade ideas this week. We talked about the pen wheel. We talked about some relative strength long ideas. We talked about earnings. We talked about HD short. We talked about Hive cash secured puts. If you're not a part of the Legion, come join the masterclass. That'll be a lot of fun, okay? I want to see y'all there. Come say hi, especially if you've been watching me on YouTube for the past 4 years. I've been going through a rocky cutscene for the past 4 years, and I'm excited to share the things that I've learned, okay? So with that being said, take care, you guys. Much respect to each and every one of you. Good job making it to the end of the video. That's really impressive. Good job. You will be rewarded greatly for your efforts. All right? All right, take care. Peace.